Welcome to the Financial Evangelist Podcast, your source for the latest in economics, crypto, and everything in between. From market movements to blockchain breakthroughs, we cut through the noise and bring you the facts, fast.
Hey everyone, and welcome back to the Financial Evangelist Podcast. I'm so glad you're here with me today as we take a deep dive into some, pretty interesting economic indicators. And if you like what you hear today, please hit that subscribe button to stay up to date on all our future deep dives. You've probably been hearing a lot lately about a potential global economic slowdown, right?
Mm-hmm.
Even whispers of recession and stagflation.
Yeah, it seems like everyone's a bit on edge these days.
Right. It's a lot to take in. And we're going to try to, break it down today. And for this deep dive, we've got some really fascinating analyses from Eurodollar University Rebel Capitalist and Stephen Van Meter to help us figure out what's really going on.
Sounds like a good lineup.
Yeah. And one thing that really jumped out at me was this move by the Bank of Canada. They've slashed interest rates pretty significantly, actually going from 5% all the way down to 2.75% in just over a year.
Yeah, that's a huge drop for sure. And it kind of makes you wonder what they know that we don't.
Right, because they're still publicly saying that the Canadian economy is doing just fine. So their actions and words seem to be telling two different stories.
It's definitely a head scratcher. It kind of reminds me of what other central banks around the world are doing too, like the Swiss National Bank. They've also been cutting rates pretty aggressively.
So you think this could be a sign that policymakers are actually more worried about a recession than they're letting on?
It's possible they could be trying to, soften the blow before it hits.
Interesting. So they're hitting the brakes, but telling everyone that the car's still cruising along.
Yeah, something like that. And speaking of things that don't quite add up, this whole idea of an artificial high in economic activity that Eurodollar University talks about, that really caught my attention.
Yeah, can you explain that a little bit? What exactly do they mean by that?
Well, think of it this way. Late 2024 saw a big surge in economic activity, especially in exports. And, that was fueled by a bunch of different factors: government stimulus, pent-up demand, even some supply chain issues that kind of inflated prices. And it created this illusion of a strong recovery.
But it wasn't sustainable.
Right. It was kind of like a sugar rush. The data is starting to show that now, for example, Canadian payroll numbers jumped by a whopping 179,000 jobs in December of 2024, but then by February 2025, they were practically flat.
So that initial burst of energy was basically a mirage.
Pretty much. And then you've got inflation, which is another piece of the puzzle, and Rebel Capitalist seems pretty skeptical of that latest CPI report, the one that said inflation is cooling off.
Yeah, they don't seem to be buying it. What's interesting is that they point out some weird inconsistencies within the report itself.
Yeah, the headline number might look good at first glance, suggesting that inflation is easing. But when you actually dig into the details, it raises questions about how they're calculating it.
So you're saying even though the overall CPI number might be down, the individual price increases listed in the report don't really match up.
Exactly. It's kind of like saying the average height in a room is 5 feet, but everyone in there is over 6 feet tall.
Okay, that's definitely confusing. Does that mean the inflation numbers are being manipulated?
Well, Rebel Capitalist doesn't come right out and say that, but they definitely encourage listeners to think critically about the data.
To not just take it at face value.
Right, because sometimes those economic indicators don't tell the whole story.
They're just one piece of the puzzle.
Exactly. And another hot topic that came up in these sources was the impact of tariffs.
Yeah, Rebel Capitalist seems to downplay their inflationary impact, arguing that without significant income growth, consumers are just going to cut back on spending in other areas.
Yeah.
They're basically saying tariffs are like a hidden tax that shrinks our budgets. What do you think about that?
I think it's a valid point. While tariffs might make prices go up for certain goods initially, they can also have a ripple effect throughout the whole economy. You start to see supply chain disruptions, shortages, and eventually even a drop in consumer demand.
So it's not just about the price of the goods that are directly affected by the tariffs. It's about the overall impact on the economy.
Right. It's like a domino effect.
Yes.
Businesses might have to cut back, jobs could be lost, and then that weakens demand even further.
It's a pretty scary thought.
Yeah, it definitely adds another layer of complexity to an already complicated situation.
And, speaking of consumers feeling the pinch, Stephen Van Meter really paints a vivid picture of what retailers are facing right now.
He does. He talks about how places like Walmart and Dollar General are noticing that shoppers are starting to pull back even on essential items.
And I remember reading that Walmart's CEO even mentioned that some customers are running out of money before the end of the month.
It's tough out there for a lot of people.
It really is.
Yeah.
So we're seeing these warning signs flashing from all directions. Central banks are acting like they know something we don't know. Consumers are tightening their belts, and even budget-friendly retailers are struggling. What's the big takeaway here? What does all of this mean?
Well, it definitely points to some challenges ahead. That artificial high from late 2024 is fading. Central banks are pumping the brakes, consumers are tapped out, and businesses are facing shrinking margins.
Okay, so not exactly a rosy picture.
Not exactly, but remember, economies are cyclical. What we could be seeing here is a natural cooling off period after a period of unsustainable growth.
So more of a reality check.
Exactly. Yeah, it's definitely a bit of a reality check. And, it manifests in all sorts of ways, like we were just talking about, slowing job growth, dwindling consumer confidence.
Right. What else should we be paying attention to? You
Yeah.
know, what are some of the key factors that are driving this global slowdown?
Well, inflation is still a major issue. Even though that CPI report tried to downplay it, the cost of living keeps going up, and it's really eating away at people's purchasing power, forcing them to make some tough choices.
Yeah. It's death by 1,000 cuts for our wallets.
That's a good way to put it. And to try and combat that inflation, central banks are raising interest rates, which makes borrowing more expensive. And of course, that can slow down both consumer spending and business investment.
So it's a double whammy for consumers. Inflation is already stretching our budgets thin, and now it's costing more to borrow money. What are we supposed to do?
It's a tough spot to be in, for sure. And then you've got all the geopolitical stuff going on, trade wars and tariffs that are disrupting global supply chains, which further fuels inflation and uncertainty.
It's like we're constantly getting hit with these economic curveballs.
It does feel that way. And all this volatility makes it really hard for businesses and consumers to plan for the future.
Yeah, and all this bad news doesn't exactly inspire confidence, does it?
Not really. Consumer confidence is a huge factor in the economy. When people are constantly bombarded with negative news, it can become a self-fulfilling prophecy. They start to pull back on spending and investing, which can actually contribute to a downturn.
So it's this vicious cycle of negativity.
Kind of.
Yeah.
But it's important to remember that economies are resilient. They've weathered storms before, and they will weather this one too.
That's reassuring. But I'm sure our listeners are wondering what they can do to protect themselves during this potential slowdown.
That's a good question. I think the first thing is to really take a look at your budget. Make sure you have a clear understanding of your income and expenses, and then look for areas where you can cut back on non-essential spending, without making any drastic changes to your lifestyle.
So maybe skip that daily latte or rethink that expensive gym membership.
Exactly. Little things like that can add up. It's also a good idea to build up your emergency fund. Having that financial cushion can give you peace of mind and help you deal with any unexpected challenges.
Like having a safety net for your finances?
Exactly. And even though it might seem counterintuitive, now don't be afraid to invest. Market downturns can actually create opportunities for long-term investors. Just make sure you're diversifying your portfolio and investing for the long haul, not trying to time the market.
So stay calm, stick to your plan, and maybe even look for some bargains along the way.
Exactly. And of course, stay informed. Keep up with economic news and analysis so you can make smart decisions about your financial future.
Knowledge is power, especially when it comes to your money. Now, before we wrap up, I want to touch on something that's been on my mind, and I'm sure it's on our listeners' minds as well. Government intervention. Could we see a repeat of 2020 with those massive stimulus packages and near zero interest rates?
It's definitely possible. When there's economic uncertainty, there's always pressure on policymakers to do something, to intervene and try to stabilize the markets.
But didn't those policies contribute to the inflation we're dealing with now? Seems like trying to put out a fire with gasoline.
It can be. While government intervention might provide some short-term relief, it's important to think about the long-term consequences. Stimulus spending can fuel inflation, and artificially low interest rates can create asset bubbles that eventually burst.
So it's a delicate balancing act.
It is. And at the end of the day, it's up to each individual to decide how much faith they have in the ability of governments and central banks to manage the economy effectively.
It's about being a critical thinker, questioning assumptions, and not just blindly accepting everything you hear from officials. Okay, so let's try to distill some key takeaways for our listeners today. What are the most important things you want them to remember from this deep dive?
Well, I think the main takeaway is that the global economy is facing a period of uncertainty. There are a lot of factors at play: inflation, rising interest rates, geopolitical tensions, waning consumer confidence. All of these things are pointing towards a potential slowdown.
Yeah, we've covered a lot of ground today. It's definitely a complex web of interconnected forces at work here.
It is. But it's not all doom and gloom. While there are challenges ahead, this slowdown could also be an opportunity for positive change. Businesses might be forced to innovate, become more efficient, find new ways to connect with consumers.
So there's a silver lining.
Potentially, yeah. For individuals, it's a time to be proactive. Review your budget, build up your emergency savings, and make sure your financial house is in order.
It's about being prepared, not panicked.
Exactly. And remember, knowledge is your best defense. Stay informed about economic developments and don't be afraid to seek guidance from financial professionals.
Right. It's all about having the right information and making informed decisions.
And absolutely.
Well, this deep dive has certainly given me a lot to think about, and I'm sure it's done the same for our listeners. But before we go, I want to leave everyone with, one final kind of thought-provoking question.
Okay, shoot.
We've talked about this economic slowdown as, a potential bump in the road. But what if it's something more significant? What if it's a sign of like a fundamental shift in the global economic landscape?
Yeah. Wow, that's a big question. Are we witnessing the end of a particular economic era?
And if so, what comes next? What does the new order look like?
That's something to ponder for sure.
It is. It really is. And as always, we encourage our listeners to, do their own research, dig a little deeper, come to their own conclusions.
Absolutely. Critical thinking is so important. Don't just accept the headlines, at face value. Look for the nuances, the underlying trends. Consider potential biases.
Be a discerning consumer of information, especially when it comes to your finances.
Couldn't agree more.
Well, on that note, I think we've covered a lot of ground today.
We have. It's been a really interesting discussion.
I hope our listeners found it insightful and, more importantly, empowering. It's all about giving yourselves the knowledge and the tools to navigate these uncertain times.
Exactly. Understanding what's happening is the first step to making good decisions about your financial future.
Well said. Well, thank you so much for sharing your expertise with us today. It's been a pleasure.
The pleasure was all mine.
And to all our listeners out there, thank you for joining us for another deep dive. Stay curious, stay informed, and until next time, take care.
Tired of spending countless hours sorting through your crypto transactions? Meet Coinly, your all-in-one crypto tax solution. Whether you're trading, staking, or mining, Coinly automatically imports and categorizes your transactions from over 700 exchanges and wallets. Generate accurate tax reports in minutes, track your portfolio performance, and stay compliant with your local tax authorities. Coinly supports tax regulations in more than 20 countries, making crypto tax season stress-free for investors worldwide. Join over 1 million users who trust Coinly with their crypto taxes. Visit the link in the description to get started today and receive 20% off your first tax report.